Hello value investors, thank you for joining me. Today I want to talk about Veeva and why I believe the Veeva is actually undervalued. So we're going to talk about its guidance and its revenue growth rates. We're going to talk about the Rule of 40 and why this company is quite attractive, particularly on a profitability way. Then we're going to bring this all together and talk about its valuation. If you haven't done so already, don't forget to check out my marketplace on Seeking Alpha. It's called Deep Value Returns, where I tell you the stocks I own and why, with a balanced argument for the stocks I own. And you're totally welcome to do a totally free trial to see if it suits you. So let's get started. So the thing is that Veeva is a crowd favorite for many people, and it has really kind of plateaued since they gave that guidance back in August. So since it came out of their fiscal year is misaligned with the calendar year. Right now they're in fiscal 21. So they just reported in August their the second quarter of fiscal 21, and they gave their guidance. So they upwards revised their guidance, and it comes out, as you can see here, that Q3 is still quite appetizing, but Q4 is going to be tapering off. So even if we assume that Veeva is lowballing the estimates to allow them to sum back these results, is still in the ballpark of 20% growth rate, what investors should keep at the front of their mind. So Veeva at 20% implies that from the start of Q1 there's been quite a dramatic deceleration from when Q1 it was growing at 38%. So if it comes out at Q4 20%, that's a 1,800 basis point deceleration. That's quite a dramatic deceleration for a SaaS stock. So this is why the stock is kind of plateaued. But I believe that there's more here than meets the eye. So let's get into it. So the first thing that I want to talk about is that Veeva is incredibly profitable. You can see here that they are saying that for their guidance for the year, their non-GAAP gross profit margins are approximately 75%. This is quite common in SaaS companies. But what is particularly striking is that their operating margins come up at 38%. This is very, very high. So you look up and down the SaaS world and you're not going to see many companies reaching that level of profitability. So that's very, very compelling. And if you consider that, if you look at the Rule of 40 where it tries to balance revenue growth rates with profitability, they reach approximately 68%. So 40% is an average, 68% is very, very attractive. So this is something that I think that investors should be paying more attention to, because there are not many companies right now in the SaaS space that are coming up around this. So I think this is something that investors should be willing to pay a premium for. Okay, so the other thing that I want to talk about is that as they progress into their calendar 25, is that their operating margin is going to come down a nudge by about 300 basis points to 35%. At that point, they estimate that their revenue is going to be approximately 3 billion. So again, the company is going to be growing at approximately 20%. And when we come into its valuation, on the front of it, it seems okay. So the company is priced at 23 times forward sales, which appears to be a premium. But as I've already discussed amply, it's a very, very profitable business. Okay, so you can say, oh, Salesforce trades at approximately 9.5 times forward sales, and that company has a lot of visibility. Yes, that is true, but you have to bear in mind that Salesforce, for all the balls of Salesforce, because it has such a heavy stock-based compensation scheme and it's very acquisitive, maybe that's more of a reasonable valuation for that sort of company. And I think that, yeah, on the surface, Veeva 23 times forward sales looks expensive, but I'm not sure if it is that expensive once you kind of dig around and think about it a bit more. So on balance, we talked about the revenue growth rates, we talked about its Rule of 40, we talked about its valuation. So as always, don't forget to check out our marketplace on Seeking Alpha. You're welcome to do a totally free trial to find stocks that suit you. Thank you. Check you out next time.